Welcome back. I'm going to go over an investment opportunity that will provide you with 40 to 60% return on your investment at the end of the first year. Yep, that's right. Too good to be true. We'll see. I'm going to justify that with data and metrics and numbers and calculations. That's the only way. That's the best types of proof for anybody. All right. So, too good to be true. Yes, it is. Historic investment deals and it's an amazing exit strategy. Is it amazing? Is it amazing in this current real estate environment where we hear all the doom and gloom, all the housing crash, people talking about the world is coming to an end, everything's crashing, all the negative news, the doomers providing all the negative narratives, recession, inflation, stagnation, housing crash, housing correction, housing bubble, inflation, and layoffs, tariffs, and deportation of immigrants, all that housing propaganda. The news media is doing an extremely good job to keep people on the sidelines. In my decades of investing experience, this is what I do. Don't fall for those false narratives. Do your own research, find the deals. As a real estate investor, there are massive opportunities. All you have to do is be a contrarian thinker, and the world is your oyster. The investment world is your oysters. You gotta know where to find the more credible information, the real data. You go through some reliable, credible sources, not the doom and gloom, housing crash bros, and all the doomers out there that are trashing everything. Everything's all negative. So without further ado, let's go to the data. I'm going to give you some proof theorem. Real estate's absolute gold mine, small town USA. I'm going to show you a property that will achieve 40 to 60% return on your investment instead of 1% keeping your cash under your pillow or putting your money into your savings and checking account at 1%, putting into your treasuries or bonds at 2 or 3%, and have inflation eating away your wealth or lack of wealth. All right. So real estate investing, buying income property is a hedge against recession, is a hedge against inflation, and that's how you build your wealth long term. All right. So with this, without further ado, let me prove it to you. And I'm not going to go over too many of this outline. You can read up, you can pause this slideshow and as I go through the presentation. So go ahead and go over all these kinds of scenarios. All right. This is the metrics that I use for many years. And today are no exception. I'm going to go over a particular market, a specific market. Every real estate is very local. In fact, real estate is very hyper local in that matter. All right. So this is my criteria. So take a couple of seconds to go over it. And let me continue with this, with my data and my trends that I always use as a real estate investor, helping thousands of my students to achieve exponential wealth for the past more than 2 decades of doing what I'm doing. All right. So here are the metrics. Again, pause if necessary to go over all these outlines that I put together. All right. So with that in mind, you buy early while everybody is paralyzed with fear. You take action after you do your appropriate research and due diligence. Again, I'm talking about Texas. Not only is Texas, I'm talking about North Texas, where according to the Wall Street Journal, NASDAQ plans to open a second U.S. headquarters in Dallas, in Texas. All right. So again, I call it Wall Street 2.0 of the South. Wall Street 2.0 of the South is Dallas, Texas. All right. So you could do your further research. And in terms of job creation, again, read all this massive data. The Dallas Metroplex is poised to be the top housing metroplex in a country, if not already, very soon in the next few years. As you can see, all this data. I'm not going to go over too much detail. In fact, Texas have more Fortune 500 companies than any other location in the country, right here. All right. So with that said, it's a financial capital of the country. If not, I know everybody understand New York, Wall Street. That's fine. The other financial center could be Miami, Florida, perhaps, and of course, in California, in San Francisco, where I live for a number of decades, you have Silicon Valley. Then, of course, Southern California, you have the financial hub and also high-tech hub as well. But the Dallas Metroplex is up and coming, is growing faster than any other major suburbs, Metroplex in the country right now and the foreseeable future. It's just mind-boggling growth in the Dallas-Fort Worth Metroplex. All right, as you can see, in about the next couple of decades, Dallas-Fort Worth Metroplex will exceed, it's going to creep up with California in terms of total population in the next several decades, which is absolutely mind-boggling. The exponential growth associated with North Texas. And of course, this little small town Sherman is getting some major high-tech companies entering this market, which is around 1 hour north of Dallas, Fort Worth, which is in Sherman. This small town USA, Sherman and the surrounding area is the new Silicon Valley. It's a new, and of course, there's a housing shortage. When there's a housing shortage, it would put upward pressure on home prices. There's not enough homes to buy. There's not enough homes to rent. The rental market is very strong, obviously. And because of the massive migration, massive population growth of people moving into the rural suburbs of North Texas, we have seen exponential acceleration of growth every single day. So what we have here as investor is we have affordable new construction in affordable growth markets with low interest rate financing to help you achieve cash flow as a mom and pop turnkey investor, regardless of where you live in country. You can participate in entering this type of off-market opportunities that I'm showing to you. Of course, if you have the ability to buy long distance, buy remote, buy turnkey, new construction, cash flow rental properties with 30-year fixed rate mortgage. And this is some of the samples of the suburban, the fastest growing small little towns right in the suburbs of North Texas. These are the 4 of the small cities, and there are more, according to the U.S. Census Bureau, among the top 10th in growth, population-wise, in all the small little towns in North Texas. As you can see right here, so I'm not going to go through all that. You see the exponential growth, you see the percentage population growth in the last few years, and this is just the tip of the iceberg. All these small cities is growing by leaps and bounds. It's just amazing. And already in this county, in North Texas, in Grayson and Hunt County, in 2024, we have already achieved almost 10% appreciation rate, where the median home price is very inexpensive. Suffice to say, in 2025, we're going to continue to achieve very high, at least single-digit appreciation. Although I don't have a crystal ball, but based on the trends, based on the data we have, this is what's happening. Potential appreciation for a while to come. So, in terms of the deals, we have off-market opportunities. Our company and our team on the ground in North Texas, we have a great relationship for decades with the national builders in the area and the local builders, where they will allocate a certain percentage of their new construction homes for our investors. All these are off-market opportunities. Some of the builder incentives, some of the seller incentives they're providing us, which is absolutely mind-boggling. I don't know how much longer this is going to last, but here are some of these highlights. Our builder, the different builder provide a little bit slight differences in terms of incentives, but typically they provide a builder's rate buy down to 5.875%, 30-year fixed. If you can buy investment property out there in a rental world, you're going to have to pay maybe like 7.5% 30-year fixed rate mortgage to finance your rental property, because That's how it is. Investors usually pay a higher mortgage rate than a owner-occupied buyer. An owner-occupied buyer, at this time, I'm recording this in March of 27th, 2025. The mortgage rate, according to Mortgage News Daily, is around 6.8% for owner-occupied buyers. For investors, they usually will pay like a 50 basis point higher, which is potentially in the mid 7% if you could finance a rental property on your own without any connections. It's great to be a part of a network, if you will. Furthermore, this great new constructions the builder will provide you with a 1 year and 10-year warranties that will save you tens of thousands of dollars for the long term by holding this property with very little maintenance because they are brand new. And some builders will pay 2% of your closing costs for you. And most sellers that within our team, with our network on the ground, will give you first year free property management. And some of the off-market listings I'm about to show you, the first year property tax rate is calculated from the land cost. So you can save tons of cash flow money on the first year for ownership. After that, it will revert back to a typical property tax rate in this local area, which is typically in this particular county. So in an area that we're promoting these brand new constructions, the tax rate is only about 1.5%, which is low for Texas, give or take. And here's the big deal. I'm giving you a sample of a property we have available. This is absolutely mind-boggling in a market that's growing so fast in the Dallas metro, where median price inside Dallas, inside Fort Worth, the median price is probably $500,000, $600,000. That's why we buy in the suburbs, fast-growing suburbs where there's a lot of jobs, a lot of high-tech boom, a lot of financial centers are moving into the suburbs. That's where we buy for cheaper, for affordable. It's all about buying affordable homes for cash flow. So it's all about, these days, it's all about affordability because the housing prices have skyrocketed massively in the past few years during the pandemic. And that put a lot of people out of the home ownership situation. So they have to rent. Going back to this amazing metrics, let me share this with you. This is amazing. Where else in a country will you buy a property, especially a brand new house, a rental property, for less than $200,000? This is mind-boggling. $190K, and the rent is like $1,550 gross rent, and brand new 3-bedroom, 2-bath, around 1,100 square foot. And as you can see, you put 20% down payment, which is total out of pocket is $42,000. The gross rent is $1,550, and because of taxes, the first year is so low, you can capture more cash flow. After the end of the first year, you will revert back to 1.5% property tax rate. You have to pay that monthly property tax in the second year and beyond. But having said that, the other expenses are quite normal, $100 in monthly insurance. Again, no property management fee for the first year and all that. Very small HOA, $11 per month. At the end of the day, what you get, and some of you may not know what I'm talking about, the rental value ratio in this particular property is 0.8%, almost a 1% rule, if you know what I mean by that. The capitalization rate is 8.7%, which is an amazing benchmark, especially in a growth market, brand new construction market, fast growing. And the cash on cash return is 14%. Anytime a cash on cash return is higher than single digit, is deemed a very good return. And your total return is 41%. Where do you get that? Let's do the math. It's not rocket science. How do we obtain 41% total return on investment at the end of the first year on this projected property? Easy. You're at risk. You put in $42,000 to down payment total. So therefore, you're getting monthly cash flow at, here the mortgage payment, 30-year fixed rate, 5.75%. The builders buy down. Monthly mortgage is $887 mortgage, $100 in insurance, $11 HOA, and then so your net operating income is $1,375. That equal monthly net cash flow $488. Multiplied by 12 months equals annual net cash flow at the end of the first year $5,867. But wait, there's more. By the tenant paying down your principal, you can get some paper benefit. I don't know how to calculate that, but it's almost $2,000 of the principal reduction benefit on top of that. And we incorporate 5% very conservative appreciation rate projection at the end of the first year. We have 5%. 5% multiplied by the purchase price of $190K equals at the end of the first year, $9,500 appreciation equity growth. So you add all this number, annual net cash flow, almost $6,000, principal reduction of $2,000, and projected first year appreciation at the end of the first year, $9,500 equals $17,313 gross equity income, right? So you divide this number, 17,313, from your down payment, $42,000, equals 41% return on your investment. All right. So is that amazing? What can you top that on the stock market? 3 to 5, 6, maybe 7%, because they have no leverage, or CD 1%, money market 1%, savings -%, inflation at 5 or 6% will kill your low performing assets. So real estate, because of leverage, the power of leverage will always beat any other asset class on a historical basis. But wait, it's not over yet. It's not over yet, because you think 41% is extremely high, it's unrealistic. I just show you the data. I'm going, why am I wrong? Please comment below. This has to be realistic. I did not exaggerate any numbers. This is a good projection. Wait, it's not really 41%. I did not even calculate the tax savings. This software could not calculate tax savings, but I'll give you some additional calculation. But there's more. But wait, there's more. And we believe before the end of this year, the Congress will pass we're gonna get back the 100% bonus depreciation. That's have a very high probability. So as a result, we ask our investors to incorporate a cost segregation study, which will accelerate your paper depreciation. As a result, your passive losses may cancel out your taxable rental income, therefore increasing your first year return ROI to even 60% or higher. So some of you thinking, look, everybody's situation is different. I'm not a licensed tax advisor, consult your tax professional. But if you're able to do a cost segregation, if the 100% bonus depreciation come back to you and you can retroactively get the tax benefit, you could have tremendous amount of tax savings to reduce your income subject to taxation. So I could confidently put in under the tax savings couple more $1,000s into this particular pro forma. Let's say $2,000 or $3,000 tax savings because of the accelerated depreciation, which I just talked about. So if I add on, let's say if I add on $3,000 more tax savings at the end of the year, and I add it to the gross equity income of 17,313. So total, I have a 20,000. 20,000 divided by 42,000. We're talking like what? Almost 50% return on your investment. The numerical analysis is not rocket science. This is third grade math. This is absolutely mind-boggling. So let's go on. All right, and now we're talking new construction. The tenant gonna stay there for typically 2 to 3 years at a time. We're gonna get an A-class tenant because this is an A-class neighborhood, and people love to rent brand new houses. And you expect gonna increase your rent. The rent we can expect to increase the rent in the next few years. So your return on your cash flow will continue to be even higher than already. All right, so I'm not gonna go over much more. This property we just talked about, my bank, is a pre-boom housing market. You read more on your own. We can read more about it. But the additional listings we have on a weekly basis, the off-market listings we offer to our investors. Look, all these property or cash flow, all the building incentives. Every week you have this type of deals, off-market, amazing deals. We buy new construction, great incentives, below market value, excellent location, excellent tenant base, excellent rental market. tremendous growth because it's financial sectors of the universe here in North Texas and high-tech universe in the suburbs of North Texas. Which is, look, all these great deals. I'm not going to go over the other performers. You can read about it, read all about it, all right? And the beauty, as I conclude, is if this market continue to increase 7-10% appreciation in the next 2, 3, 4, 5 years, which there's no reason why we should not believe this is going to happen based on the data, based on the research that we have done. In 2 to 6 years, if you buy 1 or 2 or 3 properties or more, given your capital resources, it's not easy to have $40,000 to $50,000 down payment to buy each rental property. Having said that, a lot of people can afford it. So if you can really pull the trigger and take action right now and then hold it for 2 to 6 years, then you could either sell the property, capture the capital gains, or better yet, do a 1031 tax deferred exchange to cash out refinance. By the way, when you do cash out refinance, it's a tax-free event. Isn't that amazing? This is what you can do. You can use this extra strategy, if you will, 2 to 6 years. You are leveraging into more property, doing cash out refinance or 1031 tax deferred exchange. And this is the formula. I'm not going to go over it, but you can pause this slideshow and digest the calculation of how you can leverage to buy more properties. That's how you scale. That's how you scale and build your portfolio. And here's the big picture. You buy all these kind of homes on a consistent basis, as much given your capital resource you have available. That's how you scale. That's how you scale your portfolio. 10-year, at least 10-year investment horizon, then you will reap the benefit. So you could have the potential to build your real estate empire. You got to have this mindset. You need to think like an emperor. So that's how you scale. You scale from 1 property to 10 to 100. That's right. There's no limitation. The only limitation is your mindset. Your mindset. So you need to show a vision, show a bit discipline, and you have to execute. And I know there's more to it than that, but at the same time, this kind of approach, we have teams on the ground, not just here in Texas. We have other markets. We have teams available in other markets. But at the end of the day, you defer, you delegate, and you outsource to our professional property management. In the end, regardless of whether you own rental, long distance, far away from where you live, or you own 10 rental or 30 rental or 100 rental, all you need is to spend 1 to 2 hours per month in managing your real estate portfolio. Why? Because you have a team. We have a team in all the local areas that we're promoting to help you. So you could scale and rely on your team to help you do all the hard work for you. So Warren Buffett, he said, be fearful when others are greedy and be greedy when others are fearful. Right now, there's a lot of fear. There's a lot of doom and gloom out there in the investment world. But that's how you take advantage, that you really become greedy and take action to achieve your financial future. All right. So here's my contact information. So to recap, which is you have to understand the real estate investment arena is very different. You are not a primary home buyer. You are not a owner-occupied buyer. So you, as an investor, you have the ability to go to any market, any part of the country, and focus on local area where it's growing, because every local market is very different. So we have this system, process, and procedure in place where we have done all the advanced research already. We have done it for years and decades, myself and my team with our network. And at the end of the day, we have vetted all the teams on the ground, professional property management, the realtors we work with, and with the relationship we have with the national builders and local builders in many markets, including this Texas market, which is I highlight to you in this video. So at the end of the day, there's no asset class. There's no real estate asset class still better than brand new construction, built to rent, new construction, single family home, all the way up to fourplex, and incorporate a 30-year fixed rate mortgage, take advantage of builder incentive, invest for the long term, invest for cash flow and appreciation and debt pay down by the tenant, and the amazing tax benefit. I just shared that with you. It's an amazing time. So yeah, there's really nothing more I have to say. So thank you so much. If you receive any value whatsoever from this video, please like and subscribe to my YouTube channel. And finally, if you have not already done so, put your email on my website below so you can become a free member of our real estate investment network, so you can take advantage of all these off-market listings we have available for our in-house investors free of charge. And you can utilize our free educational systems and learn and take action ultimately to achieve your goals. All right. Thank you so much for watching and listening. Have a nice day. Good luck. I'll see you on the other side. Bye-bye.